This is a brief discussion of VWAP. We have placed a VWAP indicator that we pulled off of the TradeStation forums on a 5-minute ES chart. VWAP, as defined by TradeStation, is the volume-weighted average price. You can read that and you can examine how it's calculated according to TradeStation. This isn't entirely accurate when it comes to the ES, because the ES doesn't trade in shares, of course, but rather in contracts. So what is important is the number of days back that you have on the screen. That's going to adjust the VWAP slightly. We have 5 days back for this 5-minute bar chart, and we find that works reasonably well. Now, the VWAP itself is the larger, thicker red and green line. When the bars are closing above the VWAP, the line is green. If they're closing below the VWAP, it's colored red. According to some sources, the VWAP is a useful tool from the standpoint of professional traders who want to trade as close to the VWAP as possible when they execute. And we, of course, don't use it for that purpose. But what we do find in this particular indicator are standard deviation bands. And these become useful. Above the VWAP, we have 3 different standard deviation bands. And below the VWAP, 3 standard deviation bands. 1 standard deviation per band. So the second band is 2 standard deviations away from the VWAP. And as a result of this, when we begin to notice how the Spoos move, it is typical for the Spoos to move only about 2 standard deviations away from the VWAP before we expect some kind of a change in market direction. Now that's a very crude, general rule. If you go 3 standard deviations, you're really pushing the limit. Can it move greater than that? Generally not. Generally not. If you go back in history, you will find that the VWAP, even though the market may continue to move, it stays below that third or above the, well, it stays below the third standard deviation on a rally and below the third standard deviation on a sell-off. It doesn't usually move that much. Red days, of course, you have to be careful. But if you just look at it, now here we have an example where, again, the third standard deviation band moved much further beyond the capability of the Spoos itself. It just barely hit that band in this case. All right, but usually about 2 standard deviations you're going to get a move. And in that respect, just expand this up a little bit more. Okay. When you see a move up that moves about 2 standard deviations, you can anticipate that this could be a good opportunity to short the market. Also, if it only moves up 1 standard deviation into the VWAP or down to the VWAP, and you see that that seems to be consistent, you can take a trade off of that as well. Here's a good example. Moved up into the VWAP before the market opened, Here's another move up into the VWAP, another move up into the VWAP, and then a short. And then keeping in mind a typical move down that goes beyond the first standard deviation will frequently go to the second standard deviation before it begins to retrace. So just knowing that alone can give you some clues as to what you can expect the market to do. Now we've seen a big move here all the way to the third standard deviation. Could it move continually further? Yeah, it could. But if you were looking at taking a profit, once you've moved down into that band, yeah, you've really kind of hit the limit there. Now it may bounce back up, come back down, and go a little further. But if it's moving right into that band, wow, that's a big move. It's really a big move. So just be aware of it. Now we don't have the VWAP in any formula in our strategy. We don't have any specific rule with regard to it, even when we're trading manually. It's more a matter of, at a glance, where are the Spoos? Are they above? Are they below? Should we be shorting? Should we be rallying? And if it just so happens that we're moving, that 1 to 2 standard deviations, that gives us a good reason to anticipate some change in market direction. And if you know just that alone, it's oftentimes all you need. Creating a whole mess of rules above and beyond that may not really be all that significant. But that's what we use. And it works pretty well. Works pretty well. So just keep that in mind. Take a glance at it from time to time, know where you're at, and then use our other indicators, the Fibonacci retracements and so on, for trade execution. Brief video on VWAP. Now you've got something else in your toolbox. That completes this video.